Back in the day, there was a model of, we had free social medias, and in exchange, we had the advertising model. And then there were some platforms that decided to go paywall and subscription instead of the free model.
Yep.
And so brokerages traditionally had the fee model. And then now you have this Robinhood payment for order flow model with no commissions. You being so integrated in the space, do you see a shift towards that low fee alternative so that traders get better fee structures, but in exchange they're selling the data? Or where do you feel like the future is going?
Yeah, I mean, this one is, quite talked about a lot. We definitely see the costs and benefits to these payment for order flow type models. But ultimately, if I zoom out and think about, the space and the evolution overall, even a generation before us, not to say that I'm an old man, but I'm an old man. The generation before us was still paying anywhere from $20 to, in some time, like $50 per commission. And you would literally be calling a broker, some guy sitting in St. Louis, and, basically call him up and say, hey, I want to place, a trade for 100 shares of Microsoft. That was less than 50 years. I mean, we're talking like 30, 40 years ago. And so in general, the fact that has gone away and instead we're replaced with a mobile application that allows you to buy those 5 shares of Microsoft, for less than a penny. I think that is net positive. On the back end, what that creates is a lot of gambling where people see such a lower barrier to entry, they just get started quickly. In this case, commissions were almost like a restricting factor to make you really think before you actually act.
The cost of entry.
Cost of entry. And so in this case, there is some benefit to having a little barrier there. I think taking the training wheels off and giving everybody a Ferrari is a bad choice, but that's literally what you're doing. You're basically saying like, I don't need to have like a Morgan Stanley prime broker. I can literally go into the market and make a trade right now for literally essentially free. So I think that there's, pendulum swings both ways, right? Right now we're in the Robinhood era, but I do think you're starting to see the beginnings of a in-between. And what I mean by that is that there are some people that are building subscription models around brokerage. There's some people that are building added services, or, basically giving you the option to either opt in to an order flow based model or opt out and go direct to an exchange. And these kind of, what would you call it, like sea of choices, I think is going to be much more compelling for maybe not the, kind of really basic investor, but our audience in general, they're kind of more sophisticated in some ways. And so we haven't really seen a new broker come to market that sits kind of between a Robinhood and between a Charles Schwab. There's really nobody in that middle ground. And that's really, I think, where the big market is. For the most part, we see it. That's our audience. But safe to say, nobody's really stepped into that. And some people have, but really they're few and far between. I'd say like Webull is a fresh partner of TradingView. They integrated all of their APIs to TradingView.com. And they sit in between this middle ground. They're an advanced trading platform, but they also do offer like zero commission trading. And so I think that there's going to be quite a few more of those coming to market that do a little bit more, cost a little bit more, but this kind of 0, 0, 0 everything, you do for sure have to think about it a little bit, kind of like the Facebook model.
How are they going to make money?
Yeah,
so where is it going to come from? Because if it's not coming from the front end, then it's coming from somewhere. And
totally. And you really got to be careful with that. I think if anything is free, always ask questions.
That's awesome. So in the future, you're seeing more optionality as opposed to this consolidation that we saw before?
For sure.
Awesome.
I mean, the low cost, it's kind of AWS as well. Like the cost of building a broker now has fallen precipitously for the last 10, 15 years. There's still fixed costs to it, but at my previous role at this company, Stocktwits, we built a broker. I fully know that cost, and it's pretty cheap, relatively speaking. So as a result, barriers to entry is falling. I think there will be a lot of folks who'll have the opportunity to build small kind of startup brokers. And
which is a double-edged sword, you would say, which is more optionality, but also more room for shady behavior, et cetera.
Behavior, people stepping into the market that, clearly shouldn't be in the market. But it's a free market.